Hey everyone, it's Chad Pavel CPA here. I've probably been sending you a couple of emails over the last few days, but I just like to create a video once in a while to highlight some of the really important topics here in the video and in the presentation, and certainly in the tax resolution ebook that you have access to. So obviously, if you don't know where to find the ebook, I sent you a few emails, and it will be on the same page that I have a link to in this email as well. So once again, if you haven't gone through it yet, it's only about 19 or 20 pages, and it's definitely a lot of information, research backed, and hopefully it'll just give you some more clarity on what your tax resolution options are. But one more thing just to really highlight is it's really how tax problems grow over time and why debts really grow and can kind of get out of control very quickly. And so the biggest thing to note here is that on day one, you actually are assessed the tax. The IRS essentially slaps you with a bill. You may not see it right away because it's actually on your account, which is on your account transcript. Now, you can actually go and pull your own IRS account transcripts at any given time. You just need to go to the IRS website and sign up, give them your information, and you can actually see your complete history. It's sort of like an account statement that the IRS has on you individually, and also on any businesses that you own that are typically around payroll taxes for the most part. But again, so if you look at your transcript, I can't really give you any transcript right now since they're all for our clients and those are confidential. But if you go and you find your transcript, and if you do have current outstanding debts, you're going to find that there's a couple of components to the tax debt. First one is going to be the actual tax due, and that's if you file a return, and if you have a tax due, let's call it $5,000, that's essentially what you owe. Now, when you actually file your tax return, that's effectively the date that the IRS assesses the tax, or they place the amount due on your account. If you don't file a return, you will not necessarily have a tax assessed because you haven't filed the return. They have no information to determine, okay, does this person owe us tax? Did they overpay, underpay, what have you? And even if you have made payments towards that tax, if they don't have the tax return to actually validate the actual amount due, then you'll actually have a credit balance. But that may not be correct. So if you look at your transcript, you'll see that you have at least a tax due or a tax assessed. Now, if you obviously have an open balance of the tax, then they're going to start slapping you with additional penalties and interest. And the penalties range from typically late filing penalties, or late payment penalties is another one. And that will be both for your quarterly installments if you're a pass-through business, or if you're a C Corp, you should, if you're making a profit, be paying in estimated taxes. So if you don't pay the estimated taxes, you'll have a penalty and interest on simply not paying those estimated taxes. Then at the end of the year, when you file your return, you will probably have, if you have an open tax balance, additional penalties and interest that they're going to hit you with that go back in time for estimateds. And obviously those grow moving forward. So that's what happens here in the second bucket is once you have the tax due, this blue portion grows because each quarter and each year you're in business or just living your life, you're still going to have taxes due if you're making a profit in your business. So the taxes do grow, but obviously what continues to compound is the penalties and the interest. And those grow very, very quickly, especially if you simply haven't filed a return. So if you don't file a return, the penalties grow very, very quickly. They get up to 25% per year, in addition to the failure to file and failure to pay. So not filing your return has a very stiff penalty. Not paying the tax has a much less penalty, but it still compounds over time. So you have failure to file penalties if you don't file your return and you have a tax due. You have failure to pay the tax penalties, which grow as well on top of the failure to file. And then you also have interest, which they slap on top at about a 4% or so annual rate. So as you can see, the total tax due just keeps growing and growing and growing over time. And it's very easy to see how it spirals out of control. The tax due, the penalties, and the interest continue to build up. And so that's really how these tax problems can grow just so quickly. And many of our clients come to us saying, hey, I don't know how this got so out of control. Well, as we go through their transcript, we can show them how the tax assessed plus the penalties and the interest compounding and rolling over quarter for quarter, year over year, how that can really compound into a big problem. Now, you do have some options. You can, if it's your first time, you might be able to get the penalties abated, which means reduced or completely eliminated for a first time penalty abatement. The interest, almost never. You're never really going to get that reduced. And obviously the tax due, the only way to reduce a tax due is to, if you found errors in your prior year tax returns, and you can go and amend the returns to correct them, thus lowering the tax due, even lowering the penalty and the interest, if indeed your prior tax return needs to be amended to your benefit. So there are some ways to reduce this over time, but in the end, the tax due is the tax due, and that's really the biggest portion. But again, the penalties and interest can really total up really, really quickly. So that's how tax problems grow. And again, with any first assessment that we do with all of our clients, we look at their history, their transcript. We help them determine, okay, which of these taxes, penalties, and interest are legitimate, which of those can be possibly reduced or removed. And then we go through the whole resolution process to hopefully have you end up in a better position than you are today by reducing the penalties, getting you an installment agreement, or in the rare but common case, though, is to actually make an offer to completely wipe out all of those debts or a good portion of them. So those are the typical resolution options. I hope this helps. Click below if you want to book a call with me directly. We'll walk through your situation completely free of charge. And at the end, we'll get to a game plan for you that will help you get to a better place.